Did you know Lehman Brothers secretly borrowed billions to look healthier than they really were? It's a story of deception, desperation, and the kind of financial trickery that can shake the world's biggest markets. That's right. The biggest bankruptcy in US history wasn't just about bad bets or risky mortgages. It was about a company willing to do almost anything to keep up appearances, even as the ground crumbled beneath them. It was about hidden loans, clever accounting, and a financial house of cards built on secrets. Lehman's collapse wasn't just a fluke. It was the result of years of pressure, competition, and a relentless drive to look invincible. Let's roll back to 2008. Lehman was a Wall Street legend, a name synonymous with power and prestige. But behind the scenes, they were desperate to survive. The financial crisis was closing in, and every day brought new losses. Losses were piling up, but showing weakness meant panic, and panic meant death. So what did they do? They turned to a little-known accounting maneuver called Repo 105. Sounds boring, right? But this little trick nearly brought down the entire global economy. It was a loophole that let Lehman hide billions in debt, just long enough to fool investors and regulators. Here's how it worked. Lehman would sell assets to raise cash right before every earnings call, making their books look squeaky clean. But they didn't really sell them. They promised to buy them back just days later, at almost the same price. It was like pawning your watch before a job interview, then buying it back after you've impressed everyone. On paper, it looked like debt was gone. In reality, it was just hidden for a few days, swept under the rug until the spotlight faded. This wasn't just creative accounting, it was a calculated gamble. Billions moved off their balance sheet just in time for the quarterly report. The result? Investors saw a company that looked strong and safe, a fortress in the storm. But it was all smoke and mirrors. But the real story was panic under the surface. Senior execs knew these loans were a ticking time bomb, and every quarter, the pressure mounted. They were playing a dangerous game, hoping no one would notice. Regulators missed it, auditors shrugged, and competitors? They had no idea what was really going on behind closed doors. The system that was supposed to protect investors failed spectacularly. Lehman's leaders were betting the whole bank that nobody would notice. It was a high-stakes gamble with the future of the company and the global economy on the line. As the housing market crashed, Lehman's debts piled up higher and higher. The losses became impossible to hide, and the walls started closing in. Repo 105 couldn't hide the losses anymore. The truth was catching up, and there was nowhere left to run. Investors started asking tough questions. Confidence collapsed. The hidden loans became impossible to hide, and the panic spread like wildfire. On September 15, 2008, Lehman Brothers filed for bankruptcy. $600 billion in assets, gone in an instant. The shockwaves rippled across the globe, shaking the foundations of the financial system. The secret loans, exposed. Wall Street, and the world, stunned. The collapse triggered a financial panic that would take years to recover from. Looking back, it's a reminder. When the numbers don't add up, there's always more to the story. Even the biggest names can fall if they build their success on secrets and lies. Next time you read an earnings report, remember Lehman Brothers and their hidden loans. Ask questions, dig deeper, and never take the numbers at face value. If you want more behind-the-scenes stories from the world of finance, make sure to subscribe to the channel. There's always another secret waiting to be uncovered.